Hello and welcome to my channel all about accountancy, where we convert your accounting problems into solutions. I am your host Professor Tanmaypvttutor and welcome to a new episode of Journal. As you can see, we are in a different set now. I have changed the set because we are going to need the whiteboard from today. Before starting with today's video, I would like to again remind you about the HSE crash course. If you wish to enroll for this course, then you could contact me through social media or through email. My social media links and my email ID is given down in the description box. So in today's video, we are going to learn some of the basic journal entries which you will encounter in every problem of journal. Now for just a few minutes, let us not talk about accountancy. Let's think logically. If you are starting the business, what is the first thing that you would do? I am not talking about the legal formalities, that is documenting, licensing, registration and all that. I am not talking about it. I am talking about the main thing, that is money. So whenever we are doing a business, the first step is to bring in some funds in order to start our business. So the funds could be either in cash or in kind. For example, if I want to start a business and I don't have cash but I have jewelry, I can use the jewelry. Then I can bring other things like furniture, machinery, cash, stock, God knows what not. There are so many assets which you could bring as capital. So any property which you use in order to start your business becomes your capital. So let us see how to pass the journal entry for this. But before passing the journal entry, let me remind you about the entity concept. As per the entity concept, a businessman and the business organization are two separate entities. So whenever we are making the books of accounts, we have to think from the business organization point of view, not the businessman's point of view. So for example, let us assume that Mr. James is bringing cash rupees 50,000 in order to start the business. So let us write it down. Mr. James brought cash to start business. Now in this sentence, I can see two important things, that is Mr. James and cash. So from the business organization point of view, this cash is coming in my business, right? So I am going to debit the cash account because debit what comes in. And obviously, who is the giver? Mr. James. But if you remember my last episode, I told you that the owner's name is never reflected into the books of accounts. So instead of Mr. James, I am going to write to capital account. So this is my journal entry for cash brought as capital. Now similarly, I can bring other things like furniture, stock, goods, whatever. So for example, let us take Mr. James started business with cash and goods. So in this transaction, cash is important, goods is important, and Mr. James is important. So cash and goods both are my properties and both the properties are coming in the business organization. So I will debit the cash account because again debit what comes in, and I will debit the goods account. But as I told you, goods account does not appear in the books of accounts. So I will be writing purchase. Now why did I write purchase account over here? Because the goods are as good as purchased from the owner of the business. And to, again I cannot write Mr. James' name, so I am going to write to capital account. So let us assume the cash was 5,000 and the goods were 20,000. Then my total capital will be 20 plus 5, that is 25,000. Again, every debit should have an equivalent and corresponding credit. So as the debits total was 25, credit had to be 25. Now, some owners do not have anything. They have merely like 2 to 3,000 rupees as cash. They don't have any properties to invest in the business. Such owners borrow money from banks or financial institutions. Such money is not a capital. I repeat, such money is not a capital, because even though the owner is bringing that money does not belong to the owner. That money actually belongs to the bank or the financial institution who is lending the money. For example, Mr. James took a bank loan of 20,000 and started the business. Even though these funds were used for starting the business, then too I cannot say that it is capital. So, if Mr. James started business with bank loan, then one aspect is bank loan. Here Mr. James will be ignored. I'll tell you why. When I am taking loan from the bank, what will I actually pick up? I am going to take the cash from the bank, right? So cash account has to appear in this transaction. And obviously from business point of view, the cash is coming in. So I am going to debit the cash account. And I will credit bank loan account. So always remember, whenever the funds are borrowed from someone, not only from the bank, even if Mrs. James is giving this money, then too I cannot term it as capital. So this is how you pass the entries for capital. Now let us move further. I have invested the money in the capital. So what is my next step? I have to do the business, and in order to do the business, I have to purchase raw material or finished goods depending on your type of organization. There are two types of organizations. Either you could be a trading concern or a manufacturing concern. A trading concern business organization buys goods from someone and then sells it to someone else. That is called trading. Just like wholesalers. Wholesalers buy the goods from companies and sell it to retailers. Retailers buy the goods from wholesalers and sell it to us. So wholesalers and retailers, that is the shopkeepers, are trading concerns. However, the huge companies are manufacturing concerns because they take raw materials and then they make a finished product out of it. So let us not complicate our things. Let us assume that Mr. James in our case is running a trading concern. So now Mr. James will have to buy the goods from the market. So again, there are two options. Technically there are three options. I'll show you what are the three options. First option is to buy the goods on cash. Mr. James will purchase the goods and pay the money immediately. That is called a cash transaction. Cash purchases. So let us see. Mr. James bought goods for cash. Now what are the two important things over here? Goods and cash. Again, in my last video I had told you that the name of the person is not important until unless you have cash. So the goods and cash both are real accounts. Goods are coming in, cash is going out. So my entry is going to be goods account or purchase account, debit to cash account. Isn't it simple? Goods and cash are the two important aspects of this transaction. Goods are coming in, hence I am debiting the goods account. Cash is going out, hence I am crediting the cash account. Simple? Moving on. Sometimes I will ask the supplier that whether I can pay the money after some time. For example, I purchase goods today and I am going to pay the money after 7 days. That transaction becomes a credit transaction. For example, Mr. James purchased goods from John. Here for cash or for bank is not given. Right? So here I will have to give importance to Mr. John. Goods and John. So again the goods are coming in. So I will debit the goods account or purchase account. And I will credit John's account because John is the giver of the goods. and the final type of purchase is the mix of these two. I'll show you. Mr. James purchased goods of rupees 10,000 from Julie and half the amount paid by check. Right? So here there are three things which are important. First of all, goods is important, and secondly, as this is by check, check is important, and even Julie is important. Now why is Julie important? You will understand after passing the journal entry. So first of all, the goods are coming in, so I will debit purchase account. What is the amount of the goods? 10,000. Correct? Then I am going to pay check. So check goes in the bank, hence I will credit bank account. There is nothing called as check account. So you cannot write to check account. It has to be to bank account. 5,000. Why 5,000? Because I am paying only half the amount by check. So is the debit and credit tallying? No, not tallying. The credit is short of 5,000. So 5,000. This will be what? Julie, to Julie's account. Because out of 10,000, 5,000 have been paid, but 5,000 are still payable, and anything that is still payable is your liability, and liabilities always have a credit balance. I apologize for the bad lighting. I just did not notice that the lighting has gone down. But that's it for purchases. Similarly, you can pass transactions for sales account as well. So sales can also be in cash, in credit, or in mixture. At that note, I will end today's video. If you like today's video, then please like and share my video, subscribe to my channel and hit the notification bell so that you never miss a new upload. I upload videos every Wednesday and Sunday. If you have any queries or suggestions, you can use the comment box down below. See you in my next video. Till then, this is Professor Tanmay Kesarkar signing off. Good luck and take care.